Hello everybody, the Teenage Investor here. Today we are going through the Walt Disney Q3 earnings of fiscal year 2017. We're going to be looking at the actual numbers, the breakdown of where these numbers are coming from, how they're changing their business, some big news that just came out, and also we're going to look at if I'm worried at all and what this earnings means for Disney. So let's get right into it with adjusted EPS of $1.58 per share versus $1.55 expected. So they did beat on adjusted earnings per share and basically the net income, but revenue did fall short of $14.24 billion versus $14.42 billion expected. So they did miss by about $200 million. Now let's get right into the big news that they just reported, right? So the company also announced that it will no longer stream its movies on Netflix starting in 2019. Disney instead plans to launch it in 2019 a direct-to-consumer streaming service which will host its films exclusively. So basically, Iger said that Disney has no plans to pull Marvel shows from Netflix, however. So basically what they're going to be doing is they're going to make their own streaming service that you can subscribe to, and they're going to have two of them, right? So they're going to have one in 2018 that's going to be under the ESPN name, and they're going to have another one under the Disney brand that subscribers can subscribe to. So basically what we're seeing here is that they're taking, some more of the profits back. So before they would license their movies to Netflix so they can stream them exclusively on there, but now instead they're gonna, they're smartening up a little bit. They're saying, okay, why should I give them the profits when I can get them myself? I'll just stream them myself. They bought another 45% of a big streaming service, so now they have a majority control over that company, and so now they can start with this direct to consumer. They don't have to go through Netflix to get to the consumer. They can go directly to the consumer with their movies. And obviously, Marvel slowly they're going to be taking out their things. They're not going to pull everything right away, but Netflix the stock has been dropping today as of after hours, as of when they released this press release. So now let's get into the breakdown of all the revenue. Media networks and consumer interactive sales both fell short on estimates, but parks and resorts and studios both beat estimates. So let's get right into the numbers. Media networks, $1.84 billion versus $1.99 billion. Parks and resorts, $1.17 billion versus $1.09 billion expected. Studios, $639 million versus $636.6 million. And consumer interactive, $362 million versus $394.6 million. So let's talk about the actual stock and what this earnings means for Disney. So basically, I'm not worried at all, right? The stock has been dropping, more than 4% after hours, and I just see it as foolish of the investors to think this way, because they're restructuring their business kind of. ESPN is falling short, right? They're losing all kinds of subscribers, they're losing all this stuff, but they're picking up. Now they're gonna look to the streaming service that they can go directly to the consumer, and they're gonna see that they're gonna start opening another market, right? They're gonna go under the ESPN name, they're gonna go under the Disney brand name, and sooner or later they're gonna even take out the Marvel from Netflix, in my opinion, and they're gonna do it all by themselves. And that's why they just bought another 45% of streaming company, right? So they're trying to diversify their portfolio a little bit, because ESPN in their media and networks division is kind of eating away at all the profits, right? They're losing all kinds of money there. They did do all kinds of layoffs last quarter and all that, but still to this day, the parks and resorts are doing phenomenal. All their movies, animations, and studios, they're doing amazing. It's only that ESPN and the media networks that are killing them. So with this streaming service that's going to be directly to the consumer, I think that they'll be able to pick up the revenue a little bit and pick up their net income as well. But that's pretty much it for the earnings of Q3 2017 fiscal year. I do believe by the end of the year that they're building all kinds of stuff. They're expanding their business much more. They've been repurchasing $10 billion of their share, or that's what they're expecting to repurchase by the end of this year, and by 2018 basically. So you're just seeing how they're expanding their business. Their each share is going to be worth more, obviously, because they're repurchasing shares, and they're building all kinds of things such as cruise. They're building two more cruise ships. They're building the land of Avatar. They're building in Orlando. They're building a hotel or a resort sacrificed only to Star Wars. So all the employees will be in Star Wars uniforms, and that's going to attract all the fans of the Star Wars enterprise, basically. So that's just how they're going to be expanding their business in the future. And I do see some upside for Walt Disney. I mean, they're not doing terribly bad. I mean, it's just ESPN that's starting to eat away at their profits a little bit. But I listened to the conference call, and on there, the CEO had explained that they've only lost 3% of their subscribers so far, so it's just a big amount. It's eating into their profits, but it's not a huge amount that it's irreparable. So basically, by taking all this direct-to-consumer stuff and putting it under the ESPN package, people will be incentivized when they are subscribed to the ESPN service. So basically, there's going to be more people subscribing to it, and you'll be able to watch things on your phone, on your mobile device, and you can watch all the shows, all the games. They're going to have MLS, NHL, NBA, all kinds of stuff, right? And it's going to be exclusively for them to bring it to directly to the consumer, right? Instead of going through Netflix. But that's pretty much it, guys. Thank you guys so much for watching. If you did like the video, don't forget to leave a like and subscribe down below. And until next video, have a great day.